just have a bit of a look at some of the sectors that might be ripe for growth. And I might throw to Roger. And, we did the survey at the start and people indicated that they thought healthcare was most likely to be a growth sector, followed by telecoms, and then a handful chose financial services. What's your view? Do you agree with that sentiment, or do you have a different view?
It's obvious to, I think, just about everybody that in the Western world, at least, we have an aging population. And so as a result of that aging population, the demand for medical procedures is going to go up, particularly in this generation more than any other. We're going to see an increase in the number of knee replacements and hip surgery, believe it or not. And that's because the baby boomers were the first generation to take up jogging as a pastime. And jogging over many, many years is actually quite damaging to the joints. And so, believe it or not, we're going to see a significant increase. There's also, of course, a greater incidence now of some modern or arguably modern diseases. There's believed to be an inordinately larger frequency of incidence of cancer, for example, arthritis, diseases related to the gut. Some doctors and oncologists believe that that's because of our disproportionately large consumption of wheat and modified wheat. Wheat's been modified a lot over the last 20 or 30 years just for broad acre farming, not talking about genetic modification necessarily, but there are consequences from that, and those consequences relate are going to benefit companies that are providing healthcare and diagnostic services as well as pathology services. So it's true that healthcare has enormous growth potential because of the aging baby boomers, for example, and the geographic spread of Western medicine into emerging markets where many, many billions of people have not had access. So that's another growth opportunity. But it's also true, it's also very, very true that there are threats to individual businesses based on new technologies. So that's one thing. And on the telecommunications side, well, I think that's an absolute lay down misere, and I really mean that. Not for every company, of course, but the amount of data that's going to be transported is going up enormously. So video usage is going to go up enormously. In fact, 2 years ago, it was only 46%. 2010, it was 46% of internet traffic. In 2010, 2 years ago, it was 53% of all internet traffic, and now it's up to 61% of all internet traffic, and it's actually going up at a rapid rate. Now, what does that mean? Well, that means a lot more data traveling through the pipe, so to speak, taking up more bandwidth, and it's happening constantly. So I love toll roads, a toll road business. It'd be great to be at a dinner party, and when somebody turns around and says, Roger, what do you do? To be able to say, I own the M2. The internet is like a toll road. The problem with the toll road is that cars go to sleep. People put their cars in their garage, they go to bed at night. The internet never goes to sleep. People now sleep with their phones by their side. They're always on. They've always got their Facebook account, their Twitter account, their LinkedIn open, and there are messages happening all the time. So the traffic is constant and it's going up. The businesses that are involved in laying down the pipe, businesses that are involved in storing the data, businesses that are involved in cybersecurity, and they're businesses that over the next 10 or 15 or 20 years are going to be infinitely more valuable than they are today.
So, Roger, what do you think about basic materials? What's the outlook for basic materials?
Basic materials covers a lot of different businesses. The obvious one to talk about at the moment is iron ore, and iron ore was the top of everyone's mind. You might want to pull up a chart of BHP, a capital history chart from Scaffold of BHP. That would be useful. The iron ore price bounced from 2004 to 2011 it went up a lot, and that sounds like a really simple thing to observe, but it went from, I'll get this, it went from $20 a tonne to $187 a tonne between 2004 and 2011. And everybody thought they were going to be billionaires by just digging iron ore out of the ground and selling it to China, because China would never stop growing. They would never stop building cities. They would never stop building bridges and needing the steel and the cement and so forth for all of that. Well, guess what? They were building empty cities. They were building bridges that no one travelled on. They were building train networks on which there are no trains running. And this was all about keeping people employed and all about providing the infrastructure that may one day be needed when their constituents move from the rural parts of China into the urban parts of China. But those cities remain empty. And just as China was slowing down its demand for iron ore, Australian businesses and Brazilian businesses like Vale were increasing the production of iron ore. Now, here's another really interesting fact. For 30 years prior to 2004, the iron ore price traded between $10 and $20 a tonne. There's a possibility that, a real possibility that the iron ore price could now drop to those sorts of levels again. Have a look at this chart on scaffold of BHP, and what you can see is that the profits for the company, if you go back to 2006, you can see the profit for BHP, the reported profit was 13 and call it 13.6, the normalised profit, $13.6 billion. And if you go out to 2015, the forecast profit is less. So we're looking at 10 years of no profit growth. And yet have a look at the grey columns there, which is showing you the equity invested in the business, and have a look at the red columns, the debt being lent to the company. And you can see that the debt has gone up, the equity contributed to the business has gone up, and yet the profits haven't grown. Now, I could take more money from a bank, and I could take more money from shareholders and put it in a bank account, and the only bit of equipment I would need is a rocking chair, and I could report greater profits. Now, Warren Buffett famously said on the subject of growth, he famously said, our job as investors is simply to purchase at a rational price, and listen carefully to this, a part interest of an easy to understand business whose earnings are virtually certain to be materially higher 5, 10 or 20 years from now. We simply can't be virtually certain that BHP's profits are going to be materially higher 5, 10 or 20 years from now. And that's why we're not interested in basic materials.
That's very insightful, Roger. Thank you very much for that.
Investing in shares can be rewarding when you do your research, but it can also take up a lot of your time. With so much information out there, how do you quickly sort through the companies worth investing in and those to steer clear of? Scaffold is my research tool of choice. It tracks and reports on all ASX listed companies, plus thousands of global stocks daily, helping me decide which stocks to buy and sell. I can quickly filter through the reports to get the information I need. The rating system is like a set of traffic lights for the stock market. Green is good, orange is caution, and red is don't go any further. Scaffold's top stock choices have been highlighted for their outstanding performance by Money Magazine. With Scaffold doing the work for me, I have the confidence to make investment decisions without having to spend hours sifting through financial data. Now you can take control of your time and your portfolio. Why not take Scaffold for a test drive today?